Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Thursday, December 8th. Jen Amos is off today. We're likely to see a relatively flat open on Wall Street as all eyes remain fixed on Europe. This morning, the European Central Bank cut its key lending rate to 1% from 1.25%. The move was widely expected, and it marks the ECB's second interest rate cut in 2 months. Following the decision, markets across Europe are modestly higher, but investors seem to be refraining from making any big bets until they hear what ECB President Mario Draghi has to say. They're looking for more clues that the central bank is willing to expand its bond buying program in order to keep borrowing costs from spiraling out of control in Italy, Spain, and other struggling nations. However, any promises of further action from the ECB will likely have to wait until after the summit of European Union leaders getting underway in Brussels tonight. Draghi previously indicated that help from the central bank would be contingent on Eurozone countries forming a tighter fiscal compact. That compact could include a new EU treaty that would force member nations to write tougher deficit rules into their constitutions and automatically sanction violators. Germany and France have been pushing for that change. However, a German official said that the country is unlikely to agree on a proposal to expand the Eurozone rescue effort by allowing 2 bailout funds to operate simultaneously. Despite the movement toward new steps aimed at addressing the sovereign debt crisis, the European Union's AAA credit rating may be in danger. Standard & Poor's placed the EU on credit watch negative, saying it has concerns about member nations' ability to meet their debt obligations amid deepening political, financial, and monetary problems within the Eurozone. Separately, the Bank of England decided to leave its monetary policy unchanged this morning, as expected. The UK's key interest rate has remained at a record low of 0.5% since March of 2009. The US economy is also drawing some attention this morning as investors digest the weekly data on initial jobless claims and await a report on wholesale inventories due out at 10 a.m. Eastern Time. On the corporate front, shares of Boeing are set to open 2% higher. The airplane manufacturer said that employees in Kansas, Oregon, and Washington, represented by the Machinists and Aerospace Workers Union, ratified a 4-year contract, which will give them a $5,000 bonus plus wage and pension increases. Another stock winner ahead of the open is McDonald's, up 1.5%. The fast food giant announced a 7.4% increase in November same-store sales. And finally, keep an eye on shares of Costco Wholesale. It reported a 13% jump in total sales in the latest quarter, but profit rose just 2.6%, missing estimates. The Warehouse Club is facing higher merchandise costs, but has had trouble raising prices due to the uncertain economic climate. Shares of Costco are falling nearly 3% on the news. That's the latest from Weiss Research. I'll be back after the opening bell with all the market-moving news, including the latest data on the labor market.